Warren Buffett, unul dintre cei mai cunoscuți investitori din lume, are o părere clară despre companiile care distribuie dividende. De-a lungul anilor, el a susținut că preferă companiile care distribuie dividende constante și sustenabile, dar în același timp recunoaște că nu toate companiile ar trebui să distribuie dividende. Buffett a subliniat importanța calității și a consistenței veniturilor companiei care distribuie dividende. El consideră că dividendele constante și în creștere sunt semnul unei afaceri sănătoase și prospere. De asemenea, el preferă companiile care generează un flux de numerar puternic și care au perspective de creștere. Cu toate acestea, Buffett nu consideră că fiecare companie ar trebui să distribuie dividende. Există situații în care companiile ar putea folosi mai bine banii pentru a reinvesti în afacerea lor pentru a obține randamente mai mari decât ar oferi dividendele. Buffett este de părere că un aspect important îl are managementul, aceștia trebuie să ia decizii raționale și să aloce capitalul în mod eficient, fie pentru reinvestire în afacere, fie pentru distribuirea către acționari sub formă de dividende. În general, el evidențiază că distribuirea de dividende nu este un criteriu absolut pentru investiții bune, ci este mai degrabă un aspect al strategiei companiei pe care investitorii ar trebui să-l analizeze în contextul mai larg al sănătății și performanței afacerii. Dar, pentru a răspunde la întrebarea dacă sunt dividendele bune pentru investitori, am pregătit un clip special subtitrat de mine în care Buffett răspunde la întrebarea dacă dividendele sunt bune sau nu sunt bune pentru investitorii pe termen lung. Înainte de a rula videoul, vreau să fac un anunț prin care vă informez că dacă doriți să susțineți canalul, o puteți face acum prin abonarea la canal pentru suma de doar 9,99 de lei. Iar dacă nu doriți acest lucru, nu este nimic, puteți să ajutați canalul în continuare prin subscribe și like, comentariu cu părerea voastră și în continuare să vizionați gratis videourile mele. Acum îl ascultăm pe Buffett.
The answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain. And there are many business. Take See's Candy, which we own. See's Candy has paid everything virtually out to us that they've earned because they do not have the ability within See's Candy to use large sums, which they earn, intelligently in their business. So it would be an enormous mistake for See's Candy to retain money. So they distributed Berkshire, and we hope that we move that around in some other area where that dollar becomes worth $1.10 or $1.20 in terms of present value terms. If we do that, the shareholder, whether they're taxable or whether they're not taxable, whether they're a foundation or whether they're living on income even, they are better off if we retain the money. Because if they were going to get $1 in dividends and it became worth $1.10 or $1.20 in market value immediately on a present value basis, they're better off selling a small percentage of their stock and realizing the required amount that way, and they will have more money when they get all through doing that than if we paid it in dividends. But if the time comes, and it will come someday, if the time comes when we don't think we can use the money effectively to create more than $1 of market value per dollar retained, then it should be paid out. And like I say, we do that individually within Berkshire, but because we have this ability to redistribute money in a tax efficient way within the company, we probably had more reason to retain all of our earnings. If See's Candy were a standalone company, we would simply pay out a lot of the earnings, practically all of the earnings and dividends, just like we do now, except it goes to Berkshire. we like the companies in which we have investments to pay to us the money they can't use efficiently in their own business. In some cases, that's 100% of what they earn. In some cases, it's 0% of the earn. We own some stocks that don't pay any dividends.
Hi, I'm Steve Casbell from Atlanta. My question involves interest rates. When you If I could also get your thoughts on the dividend tax cut. If by some miracle the politicians think logically and get rid of the dividend taxes, would Berkshire ever pay a dividend?
The question on discount rates, we use the same discount. I mean, in theory, we would use the same discount rate across all securities, because if you really knew the cash they were going to produce, that would take care of it. We may be more conservative in estimating the returns of cash from some, but the discount rate we would use as a constant. Now, in terms of where we commit, we don't want to use the fact that short-term rates are 1.25% to think that something that yields us 3% or 4% is a good deal. So we sort of have a minimum threshold in our mind below which we're unwilling to commit money. And we're unwilling to commit it whether interest rates are 6 or 7%, or whether they're 3 or 4%, or whether they're on a short-term basis 1%. We don't want to get hooked into long-term investments at low rates just because they're a little bit better than short rates would be, or low government rates would be. So we have minimum thresholds in our mind. I can't tell you precisely what they are, but they're a whole lot higher than present government rates would be. And at other times, we'd be very happy owning governments just because we feel that they offer attract. When we're looking at a business, we're looking at holding it forever, and we want to be sure we're getting an adequate return on capital. We don't regard what we can get on short-term rates now as adequate, but we'll still bend a little bit and start settling for lower rates for 30 years because rates for 30 days are so low. We would rather just sit it out and wait a while.
Hi, my name's Charlie Rice, and I'm a stockholder from St. Louis, Missouri. Appreciate hearing your comments on publicly held companies using their cash for dividends versus stock buybacks.
Well, the equation is pretty simple, but the practice doesn't necessarily follow logic. It's obviously, as long as you're telling the truth to your shareholders about what's going on so that you aren't manipulating the stock downward or something, when a stock can be bought well below its business value, that probably is the best use of cash. In terms of dividends, you get into an expectational situation. And for most companies that that pay a cash dividend, it doesn't make sense to bounce around the dividend from year to year, although private companies frequently do that. And we do it ourselves with our subsidiaries. Some subsidiary can pay us a lot of money one year and not so much money the next year. But with public companies, a lot of people do buy stocks to obtain dividends, and they hope for regularity, and there's a signaling aspect to it and everything. So I would say that once you establish a dividend policy with a public company, you should think a long time before you change that policy in a material way. But I think the best use of cash, if you don't have a good use for it in the business, if the stock is underpriced, is to repurchase it, and if it's overpriced, you got no business buying in a single share. But a lot of companies do it. A company that expects to regularly earn more than it can profitably employ in its business should be paying out dividends. Take a subsidiary of ours like See's Candy. We would love to expand See's Candy to double or triple its present size, but it doesn't work. We've tried it a lot of different ways. So you could argue that something approaching a 100% payout would make sense there, but most managements worrying about earnings falling off at some time in the future would rather establish a lower level and therefore ensure regularity of dividends by going with a conservative level. It's obviously something we think about at Berkshire when we have $30-odd billion around. If we can't figure out a way to employ that over time, it's a mistake to keep it in corporate form. But we have this expectation, and I think it's a reasonable expectation, that we get to put it to work. If we ever came to the different conclusion, if we thought our stock was significantly undervalued, we'd probably figure in terms of dispersing it through repurchases, particularly where now dividends and capital gains are neutral for individuals. If our stock was not underpriced and we fell, we would probably do something via a dividend. It's not going to happen soon, however.